Samora, let's get your view right now overall on the market activity we saw last week, because of course we had some strong earnings coming through from the likes of Standard Chartered, BBK. Those stocks are ending a lot firmer on Friday, and overall we've seen a lot of positive sentiment filtering through into the banking sector. But your views on the big trades that we saw going through the market last week?
I think for one thing, what we saw last week was some foreign investors selling off, largely just to take profits on their earlier positions. So that was one of the things driving the markets. But overall, what's been driving the markets is that you're having lower interest rates that have by and large made equity investments more attractive. And secondly, you have improved growth prospects. You have inflation coming down. Although there's some noise on the exchanges, but the macro and the overall growth picture looks good for the economy. So a lot of investors are coming to take positions, and that's what's been driving the market forward. And with some stocks such as Uchumi and KCB and maybe equity, we've just seen the market correct itself with regards to pricing. There were some huge discrepancies because Uchumi was selling earlier on in there for a P of around 5, whereas we thought that was a bit way undervalued. So I think there's some correction in terms of the pricing of the stocks and the fundamental values.
Let's talk about the finance sector, because the new finance bill has now been signed into law. What implications is that going to have for the banking sector?
For one, the good thing is that some of the more contentious clauses, such as capping interest rates, have been dropped. But overall, in terms of the financial sector, you could see a better competitive environment emerging because of the rule to at least publish the annual percentage rates, and not just the nominal interest rates, but the annual percentage rates that reflect the cost of borrowing within the market. In the finance bill now, banks will have to, the CBK will publish the interest rates being charged by banks on the Gazette, the CBK website, and at least 2 national newspapers. And I think that could improve the competitive environment in terms of pricing. Secondly, also, banks will have to publish credit information, both for good borrowers and for bad borrowers. So that will really improve on the informational asymmetry that currently prevails in the banking sector, and hopefully lower interest rates.
Yeah, high transparency, of course, is always a good thing. Let's focus in on KenGen, because announcing its plans to build a $686 million gas-fired power plant. It's looking at possibly entering into a PPP, of course, a private-public partnership. What type of investor appetite do you think is out there to invest in this plant?
I think it's massive. We've gotten a lot of interest in the energy sector from foreign investors from around the world, from the Middle East, from Singapore, from North America, looking at the Kenyan and the East African gas sector, largely due to a huge degree of underdevelopment of energy infrastructure, as well as now the emerging resources and commodities to support energy in the industry, in the region. And what KenGen is looking at is not only Tanzanian and Mozambique gas, but also there's the prospect for gas being discovered off the Kenyan coast. And if you add that over the fact that KETRACO is building transmission lines into Manda Bay just off Lamu, then it's a really exciting prospect, because now a company like KenGen can set up an LNG plant and source gas just from, not far away, and transmit it towards now Nairobi and other higher consuming areas. So the dynamics and the interest is very strong for this for such a project.
Yeah, and of course huge benefits to Kenyans, with the country constantly having to battle blackouts. We know that South Africa also is at risk of that this year. Let's focus in on the tourism sector, because that's also something that's dominated some headlines. A lot of concern around the implication of a slowdown in tourist arrivals from Europe right now. But interesting that TPS Eastern Africa's CEO coming forward and saying that tourist arrivals that have come through from the business sector is still buoyant. So it's interesting that even though we have arrivals from the overall general tourists falling back, business travelers are still coming to Kenya, and that's likely to keep the market going for some time.
Yeah, exactly. And if you look at the trends from 2007, it's been a trend of growing business travel, rather as opposed to Europeans, I mean just the ordinary tourist and leisure travel. Because for one is that the European markets, which were the large source markets for leisure travels for the Kenyan market, have been slowing down due to the economic circumstances going on in that market. And business tourism from the Middle East, from Asia and from South America has been growing because of the increased opportunities. I mean, you're talking about, just like we talked about, the energy sector, the IT sector, the infrastructure sector. There are a lot of foreign investors who are looking to invest in Kenya, and that's what's been driving the growth of business tourism. There are a lot of hotel companies such as the Radisson that are setting up in Kenya and the whole of East Africa. So that is expected to boost TPS going forward. The only thing is that a lot of the TPS offerings such as Zanzibar, Dar es Salaam, and parts of Elementator in the Rift Valley are more for leisure travel. So maybe they should, going forward, they could restructure now and focus more on hotels like the Nairobi Serena Hotel that serve more business tourists as opposed to leisure tourists.
I'm sure that's something that the chief has got on the agenda, given the fact that he obviously has cited that as a growth area. Samora, thanks so much for joining us this morning on Open Exchange. Samora Kariuki, research analyst from NIC Securities.